गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में फिर से आपका स्वागत है। इस बार मैं इन्फोसिस के बारे में बात करूंगा क्योंकि रुपया का वैल्यू नीचे जाता रहेगा और 85 तक जाएगा ये साल या 18 महीने में। व्हाट आई एम ट्राइंग टू से इज टुडे वी विल डिस्कस इन्फोसिस। द रीजन दैट वी आर गोइंग टू डिस्कस इन्फोसिस इज आई एक्सपेक्ट द डॉलर टू strengthen against the rupee as we continue. Over the last 15 months, it's fallen from 71 to 83, though it's now trading at 82.50 as I speak. I expect it will reach 85 in 12 to 18 months. And therefore, the two sectors which are very strong in dollar revenues, one is IT and the other is, of course, pharma. And today I chose to talk about Infosys, which is a bellwether stock for the IT industry. For a long time, Infosys was delivering better results for the investor than TCS. Then, over a period of time, TCS overtook Infosys. There was trouble in Infi as the promoters exited and Vishal Sikka made a mess of things. Vishal Sikka is now history, and we have a promoter, Nandan is back as the chairman, and you have a professional as the CEO and MD of the company. There was a lot of rumor about that the new MD was misusing money. The prices dropped to 600 in between. Those who followed my channel, I told them that you could buy the stock at that price and that Infosys would come out clean. Infosys did come out clean and the price went from 600 to 1890. I told you not to sell that stock. I still tell you stand by their decision not to sell that stock. The price of that stock again cracked to nearby 1355. It came as low as 1370 last week, and I gave a call in my Tamil channel to buy it. Why did I ask you to buy it? Because the profits to earnings ratio was only 25. That is today. At that time, the P by E ratio was further lower and you are getting it at 23 times earnings. A company which is consistently showing growth but also has a natural hedge with most of earnings coming from Northern America in terms of dollar shows that this is a company we need to keep investing in. The company's revenue 62% comes from North America, 25% comes from Europe, 10% from the rest of the world, and the Indian revenue is only 3%. But it handles the Indian income tax website. In the last quarter, revenue went up by 20%, and return on equity in the last 3 years has grown by 27%. The company has practically very little debt and lot of cash hanging on the balance sheet. The earnings per share is at 56 rupees. So that is why the price at this level is 25 times earnings. The current price of the share is 1423. And so what I expect to happen is that if there is a market fall, I expect Infosys to correct further because the Indian stock market is overvalued and will trade in a range. FIIs are major investors in Infosys, and as rate rises in India get bigger, you can expect them to pull out. Let us look at the shareholding pattern. The promoters own only 15%. There are 8 of them. FIIs have 36%. Domestic investors hold 33%. These are domestic institutional investors, and the general public 16%. So the first major trigger could be that FIIs would like to exit. When FIIs exit, you will have DIIs and public buying those stocks. FIIs will exit because they are expecting a severe recession in America this year, and if indeed there is recession, this company is primarily reliant on Europe and America for its earnings, so the rate of growth of earnings could plateau. It is quite possible if the recession is very severe, you will find no growth. Also, two important executives have left this company, one to head Cognizant as head of Cognizant and the other to head Tech Mahindra as head of Tech Mahindra. Both these people were in the BFSI sector, which is the strongest sector for Infosys. But the current managing director is a very strong person, and Nandan still continues to be the chairman. Infosys went public in 1993 at 95 rupees a share. The issue was not fully subscribed, it devolved. The underwriter picked up the stock. And so at 95 rupees at 10,000, you could have easily bought 105 shares. In the next 30 years, in his life as a public company, the company has grown from strength to strength. The company has given a bonus 8 times. It split the stock once. That happened in 1999. So if you had bought 105 shares each with a face value of 10 rupees, it would have become 80,640 shares of face value of 5 rupees. At the current market price of 1,423 rupees a share, you will roughly have 11.47 crores. Let us take the total number of dividends. The company has given 57 dividends over the last 30 years. If you compound those dividends at a rate of 5%, which is the lowest fixed deposit in these 30 years, and assume as the average and not spent that money on other frivolous issues, you would have made 2 crores 75 lakhs. So basically, an investment of 10,000 rupees would have practically become 14 crore rupees today. It is not a case that all IT companies would have done that. If you had invested in Silverline, you would have lost zero. That was a good company at that time, run by people who passed out of IIM. If you had invested in Pentafor, the value would have been zero. So there were several software companies that went bust. If you had put your money in Satyam, it would have brought you all the way into the index, and then one fine day it come down to 2 rupees in value. So what I'm doing is basically talking about hindsight bias. But it is possible to argue if you had put 10,000 rupees in all the major IT companies of that time, you would have put 60,000 rupees. But even in that 60,000 rupees, Wipro, HCL, and Infosys would have survived and given you very good returns. And the other seven companies would have gone down the wayside. But even assuming that Wipro and HCL did not give you great returns, which they did, you would have still made 14 crores of an investment of 1 lakh, which is a remarkable investment. This kind of strategy was followed by John Templeton. When the markets collapsed, he invested $10,000 in all American stocks which were trading less than $1. He bought it, he traveled all around the world. He came back and found out over years that money had more than quadrupled. Similarly, if you had taken a blanket bet on all IT companies available at that time, this would have been the case. So, my urge is I talked about gold and what stocks to buy. Today, I'm talking about Infosys. And this is because again the theme is same. The rupee is set to weaken against the dollar. And in 1993, it was 26 rupees to a dollar. Today it is 83 rupees to a dollar. It will go to 100 at a matter of time. So even if revenues stagnate, in dollar terms, you are going to make a lot of money in rupee terms. So if the Infosys at its 52-week low is definitely a great buy. Thank you for watching Paisa Bolta. If you like this content, like my video, subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Paisa Bolta.